Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is September 11th. We are going to take a look at one out of the industrial sector, Steel Dynamics. Let's jump right in the video. Steel Dynamics, if you want to know more about this company, check them out on their homepage. It's stld.steeldynamics.com. That's STLD, and that's actually their ticker symbol as well. STLD.STEELDYNAMICS.com. That is their homepage where I pulled this information from. Founded in 1993, today Steel Dynamics is one of the largest and most diversified domestic steel producers and metal recyclers in the United States, with facilities located throughout the United States and in Mexico. We operate using a circular manufacturing method or manufacturing model, producing lower carbon emission quality steel using electric arc furnace technology, EAF, with recycled ferrous scrap as the primary input. Our circular economy is driven by the passion and dedication of our innovative teams and each of our operating platforms: steel fabrication, and metals recycling. So they are basically a steel supplier who uses recycled metals as their main import or main source of steel. Let's jump into the financial information. Taking a look at them, because they are down 2.53% on the day. We are talking about Steel Dynamics, ticker STLD, out of the industrial sector. They closed out the day at $100.34, down $2.60. 52-week range as low as $69.12, as high as $136.46. So they are floating kind of right there in between their 52-week high and their 52-week low. Average volume 1.347 billion. Today's was 1.3, so right in line with their overall average volume, even though you can clearly see pretty much a sell-off from the start of the day to the finish of the day. Market cap of 16.621 billion, a beta of 1.52, so they are more volatile than the overall market. Price to earnings PE ratio is $5.81, though these steel manufacturers, if you were to compare them to some other ones, typically have a low price to earnings ratio here. Even though that is pretty low comparative to other stocks, it's not really super low compared to their industry average. Earnings per share, EPS, is sitting at $17.27 per share. This is very high. Very nice number here for earnings per share. Earnings date, October 17th through October 23rd. Sometime in between that range there, you should see their next earnings date. For dividend is $1.70 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. Their dividend yield is 1.65%. This is a little lower than what I typically look for, so they would need to pull back significantly for me back towards this 52-week range to try to get this up into at least the 2% range. Though if they are growing fast, which we'll see in a little bit, their dividend over time, maybe it's one to consider or at least put on the watch list, but let's keep on going. Ex-dividend date is coming up September 28th, so if you were to buy them now, you would be in line based on how many shares you bought for their next dividend. And on the ex-dividend date, you want to own shares before the 28th. So September 27th or before, you would need to buy shares to be in line for the next dividend payout. And a one-year target estimate, at least according to Yahoo Finance. I'm not affiliated. They see it reaching $110.04 over the next year, so it does speak to some upside in the stock price, at least a little bit according to Yahoo Finance. Let's jump over under statistics. If you were to go here under dividends and splits, we're going to look at dividend yield theory, see if this is potentially undervalued. To do that, we look at the 5-year average dividend yield, which is 2.21%. We compare it to the current 1.65%, or over here, forward annual dividend yield 1.65%, same number. And since this number is lower, it speaks to potential overvaluation on this one. If this number was higher than the 5-year average, then it would speak to some undervaluation. But this one, at least according to dividend yield theory, right now is potentially overvalued. So again, another reason to maybe throw this on the watch list if you're interested in a steel company, at least in my opinion, and wait to see if it pulls back closer to this 52-week low, and then that would put you more in line with dividend yield theory, saying this one might be at least fairly valued or over. Very low payout ratio on this one, 8.86%, so they have a lot of room. Even though they have a low payout at 1.65%, they have a lot of room to increase the dividend over time, at least if their earnings and everything continues to grow. Ex-dividend date we saw September 28th. Looks like they're going to pay October 16th. Now, I like to look at financials. Under financials, we're going to look at free cash flow. We want growing free cash flow over time because we want growing dividends over time, and dividends are paid out of free cash flow. So we'll go back to 2019, 944 million here in 2019. 2020, they had a decrease here, negative 211 million. 2021 up to 1.1 billion, 2022 up to 3.5 billion. So overall, from 2019 to 2022, definitely see growth. You can see right here, at least according to this up to year right now, they are almost to where they were last year, though the year is not over. So we'll have to wait and see how it shakes out for 2023. And another one that I like to see on this one, growing free cash flow and repurchasing their own shares. You can see that consistently repurchasing shares over time, and it looks like as their free cash flow grows, they increase those reshare purchases. Here's where we're at to date, 1.6 at 1.8 last year, 1 billion here, 106 million, 348 million. So they are consistently buying back their own shares with their growing free cash flow over time. Very nice numbers overall so far, except for the valuation. Dividend yield theory tells us this one is potentially overvalued right now. Now let's look at stockanalysis.com. I always recommend more than one source so you can back check the information you are getting is accurate. And another one that I like beyond Yahoo Finance is stockanalysis.com, and they have 7 stock analysts that have taken a look at this. They call it a consensus hold, right? This is hold. So they have a low estimate of $95, which would be a 5.35% decrease from where it currently sits. Average estimate of $110.29. This is really close to what we saw with Yahoo Finance on the previous page. That would be a 9.88% increase in the stock price. And if it happened to hit their high of $123 estimate, that would be a 22.55% increase. All the while, you could collect that 1.6% dividend yield. And if you were to wait and see if they pulled back any further, you may be able to get that yield up a little higher. Now, I like to go under statistics here. You're going to find financials, the same information. They go back a little further actually on stockanalysis.com. Statistics, I like to look at return on equity and return on invested capital. So to do that, we'll look over here. ROE is return on equity. ROIC is return on invested capital. I like 10% or greater for both. Return on equity is 36.20, beats the 10% I'm looking for, over 3 times the amount. And return on invested capital, 30.30%, same thing, over 3 times the amount. Very nice numbers overall. They did not have an estimate for EPS growth. I like 5% or better. They just didn't have it on this one, or revenue growth. I always throw that in as a kicker. We want growing at revenue as well, but that's more of a deep dive if we are interested to look at the financials. Let's keep going here and look at the dividend. So again, very low payout ratio on this one, 9.86%. Dividend growth, very, very fast dividend growth, 26.17% dividend growth on this one. So if you're looking for a fast grower, even though it has a low dividend yield right now, and again, if you were to wait for them to pull back closer to their 52-week low, I think you could get this one close to, if not over, a 2% dividend yield. It has high growth. Went back to 2020, September 29th, 2020, 25 cents they were paying out. They jumped that up into March 30th, 2021 to 26 cents. They jumped that up again March 30th, 2022 to 34 cents. And they jumped that up again, guess when? In March 2023, up to 42 cents and fractions of a penny. That's half a penny right there. So 42 cents we'll call it. So very fast dividend growth on this one. Very low payout ratio, even though the dividend yield is low. They are a quarterly payer. They do pay out. This is one of the few stocks, and there aren't a lot of them, that pay out in January. Their time for January, April, July, and October. So again, if you were looking for a January payer on that time frame, this may be one to throw on the watch list. Add it, see if it pulls back here over the next 3 to 6 to 9 months. This is one very good numbers overall. Return on equity, return on invested capital, revenue growth is growing. I did look at that. I'd like to see an estimate for their EPS, but it has very high EPS right now. Very good numbers overall, except for the valuation. Like I said, I'd like it back closer to that. I'd be interested in this one probably in the 70s, 74 or lower, 75 maybe even. Right around there is where I'd be interested in this one overall. This is the vested interest stock screener. You can pause this, go through this. This is also how I set up the videos. Understand the business, growing free cash flow, growing dividend payout ratio 75% or less, check valuation based on dividend yield theory, buy below current cost basis or within 15% of its 52-week low, return on invested capital, return on equity. We looked at both of those. I like 10% or better. Earnings per share growth, they just didn't have that on this one. And for financial companies, I add in price to book ratio, 1 being fair value, anything under 1 undervalued, anything over 1 being overvalued. Must beat 5 of 8. If it's a financial company, must meet 6 of 9 for me to even consider doing a deeper dive on the company. Well, that is it for Steel Dynamics. Let me know what you think. Do you have it in your portfolio? Is it one you're watching? Do you avoid the steel companies altogether? I know it is a very cyclical business. Whenever times are doing good and they are doing well, that's great. But whenever times are doing bad, we're in recessionary times or building is slow, they do not do well. I am thinking that this one might be a sneaky play on the recent infrastructure investments the government is doing. So if we're going to have some new roads, bridges, that sort of thing, they're going to need steel. So maybe, just maybe, this one might benefit from that infrastructure building that's going to be going on over the next several years. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down below. It really helps out this channel. It doesn't cost you a thing. Drop me a comment down below as well. Hit that like button. It really helps with the YouTube algorithms. It really helps a small YouTube channel like me. And drop a comment. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have a stock like Steel Dynamics you'd like me to cover in the Stock Pick of the Day series, drop it down below and I'll work it into the rotation whenever it pulls back on a day. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risky kinds of money. Should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel by a certified financial advisor.